Hi guys, I'm David Shaw and today I'll be talking about petty cash. So in this video we'll be talking about the definition of petty cash, how it works, steps to record petty cash, and an example. Just starting off with a basic definition, petty cash or petty cash fund is a small amount of money available for paying small expenses without writing a check. Petty cash is also the title or the general ledger current asset account that reports the amount of company's petty cash. The amount of petty cash may vary by company to company and will be in the range of $30 to $300. Steps to record the petty cash fund and how it works. Firstly, to set up a petty cash fund, the cashier creates a check in the amount of funding assigned to a particular petty cash fund. The initial petty cash journal entry is a debit to the petty cash account and a credit to the cash account. The petty cash custodian then disburses petty cash from the fund in exchange for receipts related to whatever the expenditure may be. There is no journal entry at this point. Instead, the cash balance in the petty cash fund continues to decline while the number of receipts continues to increase. The total of receipts and remaining cash should equal the initial amount of petty cash funding at all times. However, errors and theft may occur in the variance from the initial funding amount. When the cash balance in the petty cash fund drops to a lower level than recommended level, the petty cash custodian applies for more cash from the cashier. This takes the form of a summarization of all receipts that the custodian has accumulated. The cashier creates a new check in the amount of receipts and swaps the check out for the receipts. The petty cash journal entry is a debit to the petty cash account and a credit to the cash account. The petty cash custodian refills the petty cash drawer, which should now contain the original amount of cash that was designated for the fund. The cashier creates a journal entry to record petty cash receipts. This is a credit to petty cash account. The balance of the petty cash account should now be the same as the amount which it started. Petty cash is commonly associated with storefront type businesses who deal with clients who may pay in cash. A petty cash supply allows such businesses to make it easier to supply change for the client. Petty cash may also be used for small issues that may arise, such as change of light bulbs, food, or new stationery. Example: Store X keeps a collection of petty cash on hand. A client is purchasing an item that costs $50 and is paying with a $100 bill. The store only has $100 bills in the register. The cashier can offset the difference by giving the client $50 from the petty cash supply.